Do you agree with Howard Marks is more needed on the stimulus front on top of this 1.9 trillion that's already been proposed?
Yeah, I think that's certainly the drift in Washington now that we've had a bit of a blue wave, and I think I would agree that the economy is not out of the woods yet. We do have a vaccination program that's starting off somewhat bumpy in the U.S. and Europe. So there is kind of light at the end of the tunnel, but the tunnel is still there, right? So we have to do everything we can to get through that tunnel with the minimum amount of damage to the economy, to the labor market, and indeed to the corporate sector. So I think there's something in this for everyone, right? In this idea of going big and doing more on the fiscal front. Yeah, so I think it's necessary, and it's probably going to be a good thing when all is said and done.
Right. Well, then what do markets do initially under a Biden presidency?
Well, I think we're seeing it, right? We're seeing a bit of steepening in the yield curve. We're still seeing the equity markets and risky assets amid some volatility doing reasonably well. And I think that makes sense, right? There is this underlying concern that we'll get more inflation because of the big growth in money. But I don't think that's really the issue at the moment or any time in the foreseeable future, right? The reason the yield curve is steepening is because we're going to have a more reflationary kind of policy with fiscal support rather than a kind of full-blown inflation. So I think the risk asset trade and that rebalancing, that's going to continue with some bumps and fits and starts. And I think over time, what's going to happen is a much more varied kind of recovery than a simple risk-on trade, right? What's going to be the driving feature of this recovery, I think, is a lot more specificity at idiosyncrasy, because the structural differences in national economies are going to come through in the recovery, right? There's going to be a gradual process of reopening. It's not going to be like flipping on a light switch. When we compress the economy, we shut it down in large part, but the opening is going to be more varied. And then, we're going to continue to have some barriers between countries because of trade restrictions, investment restrictions, and geopolitics and geoeconomics. That's also going to lead to much more diversity in economic performance, I think, over time. So we're looking at a situation where I think strategic asset allocation is going to go from sort of concentration strategies in the U.S. and China, growth and technology, to portfolio rebalancing, right, to this great rotation. But within that, we're going to have a lot more selectivity to try and put in the bank.